What you're about to discover in the next few minutes will fundamentally change how you understand precious metals pricing. I'm not talking about theories or predictions. I'm talking about hard evidence that reveals a massive disconnect in the global silver market. And this disconnect is telling us something critical about the financial system right now. Before we dive in, I need you to do something. Hit that subscribe button and turn on notifications right now. Here's why this matters. This channel exists to show you what's really happening in the markets before it becomes obvious to everyone else. By the time the mainstream catches on, the opportunity is already gone. Subscribing takes 2 seconds, but missing what I'm about to share could cost you dearly. So do it now, then come right back. All right, let's get into this. I want you to consider something that happened recently in China. While silver was trading around $25 in New York, actual transactions in China were taking place at $86 per ounce. Let that sink in for a moment. Same metal, same day. 3 times the price. This isn't a rumor. This isn't speculation. This is documented pricing from real buyers paying real money for physical silver. Now, you might be thinking, why would anyone pay $86 when they could get it for $25? That's the exact right question to ask. And the answer reveals something deeply broken in how precious metals are priced today. Here's what you need to understand. There are essentially 2 different silver markets operating right now. The first market is what you see on your trading screens. Futures contracts, exchange-traded funds, derivatives. These are paper instruments that represent silver, but aren't actually silver. They're promises. The second market is where physical metal actually changes hands. Real bars, real coins, real delivery. And these 2 markets are telling completely different stories. When Chinese buyers paid $86, they weren't being foolish. They weren't getting scammed. They were desperate for physical metal, and they were willing to pay what it actually costs to secure real silver right now. That premium over the paper price isn't random, it's a signal. It's the market screaming that something is fundamentally wrong with the pricing mechanism we've all been told to trust. Think about basic economics for a second. If silver really was available at $25 in New York and selling for $86 in China, arbitrage traders would immediately step in. They'd buy in New York, ship to China, and pocket the difference. That's how markets are supposed to work. But that didn't happen. And the reason it didn't happen is the most important thing you'll hear today. The silver isn't there to buy. The physical metal available for immediate delivery is far more scarce than the paper market suggests. This is why you're seeing dealers halt sales without warning. This is why premiums keep climbing even when the spot price stays flat. This is why delivery times keep stretching longer. The price you see on financial websites has become increasingly disconnected from what it actually costs to get metal in your hands. Let me explain why this matters so much, especially for silver. Gold can move quietly. Bitcoin can spike and crash without breaking anything systemic. Stock markets can be managed with central bank intervention, but silver is different. Silver is both a monetary metal and an industrial necessity. It can't be easily substituted. It can't be printed. And most importantly, you can't fake physical delivery forever. Every solar panel being manufactured requires silver. Every smartphone, every electric vehicle, every advanced computer chip needs silver. Military systems rely on it. AI infrastructure depends on it. Medical equipment uses it. The demand for silver in technology and industry is accelerating exactly as mining supply is becoming more challenging. We're seeing lower ore grades, fewer new discoveries, and recycling that can't keep pace with consumption. Meanwhile, governments worldwide are stockpiling strategic metals. Industries are building inventory cushions, and individual buyers across the globe are quietly pulling physical metal out of the system. All of this creates pressure that paper contracts simply can't resolve. Here's where it gets really interesting. China isn't speculating on silver. They're not day trading futures contracts. They're consuming massive amounts of physical metal for their manufacturing base, their technology sector, their green energy build-out. When Chinese buyers paid $86, they were sending a message to the world. They were saying that paper promises are no longer sufficient. They need the actual metal, and they need it now. That moment exposed something the financial system has tried very hard to hide. The paper price of silver is being managed. It's being controlled to prevent shockwaves through the broader financial system. Because if silver were allowed to price based purely on physical supply and demand, everything connected to it would have to reprice immediately. Energy markets, technology stocks, currency stability, defense budgets. The ripple effects would be enormous. This is exactly how monetary resets begin. First, you see quiet divergences between paper and physical markets. Then shortages appear, then premiums explode. Then suddenly prices reprice to levels that seem impossible compared to yesterday. And finally, panic buying sets in when physical availability disappears entirely. Most people wait for confirmation before they act. They wait for financial news networks to cover it. They wait for analysts to change their ratings. They wait for clear signals that everyone can see. But here's the problem with that approach. By the time confirmation arrives, the opportunity is gone. Smart money moves when things don't make sense yet, when numbers contradict narratives, when foreign markets reveal truths that domestic markets are hiding. I want to be very clear about something. This isn't about trying to flip silver for quick profits. This isn't about day trading or chart patterns. This is about understanding that the pricing mechanism for a critical strategic metal has broken down. And when that breakdown becomes obvious to everyone, the adjustment will be swift and severe. If the real clearing price for physical silver is already multiples higher in major markets overseas, then the current Western paper price isn't an opportunity in the traditional sense. It's a warning. It's telling you that the system is holding something down artificially, and that can't last forever. Now, I want you to think about something. Why are central banks around the world buying gold at record levels while retail investors watch Netflix? Why are governments rushing to develop digital currencies while physical assets quietly become harder to acquire? Why is silver specifically managed more aggressively than almost any other commodity market? The answer is that silver is a critical indicator. When it breaks free from artificial price controls, it signals that the system's ability to manage markets is failing, and market control is everything to the current financial structure. Without it, confidence breaks. And without confidence, the entire architecture of debt-based money comes into question. This is happening globally, by the way. I'd love to know where you're watching from, so drop a comment below with your location.